Welcome back to Opening Bell. We're getting you ready for this trading day. We are seeing some slight down arrows today. We did get in the ADP print. We saw minus 32,000 jobs versus the estimates of 45,000 plus. Not necessarily so great. Nike has an up arrow, but the government is shut down. And let's see what Peter Tuchman, senior floor broker, Trade Moss, has to say about today's action. Good morning to you.
Good morning to you.
How are you
it's always
feeling?
good to be
here. Another day at the beach here. Tell me, what are you thinking?
So look, today is just not another day. I mean, today there's a lot going on. So we just ended up the third quarter, right? 2025 has seen a market do absolutely everything possible that could be thrown at a market in our world has happened in 2025, right? The high, the lows, a new administration, that self-inflicted, economic Armageddon of February, March, April, the interest rate thing, tariffs, a couple of global wars. It's all happened and it's all affected the market in a big way, yet we are still trading at record highs, okay? So that's the overview. Now, we just started an interest rate cutting cycle. Historically, when you do that, and it lasts for over 12 months, historically, there's a 80% chance of at least a 16% bullish move in the market over time. So that's a positive thing. The bottom line is earnings have been
really... That's a big move.
That's a big move. So that's been, just to break that down, I didn't explain it that well, but once you're in this cutting cycle and it lasts, which is what we're going to be, because we know we're going to a couple more cuts coming into the end of this year, and they've already set the stage for 2026. When that happens over a 12-month period of time, at the end of it, the markets over time have been up at least 16%. So that's kind of a right. 80% of the time. Correct.
You said 80% chance of a 16%.
Correct. And that's one thing. We just closed out the quarter with a spectacular surge in the market. I mean, it was sort of, you would think in markets that are trading at record highs for such a long time, at the end of a quarter you would see profit taking.
Right.
We didn't see that. Yesterday we had $4 billion to buy on the close. So why was that? Because I think there's a lot of money still on the sidelines.
Right.
And these people, big hedge fund guys, mutual fund guys, could not close out the quarter and not have allocated their money out of cash into the market. So I think that's what's also going on. And so we closed out the quarter. September seasonality didn't happen. It was a super solid month in a lot of different ways.
Right.
Interest rates was a big part of it, a lot of different things. We also are checking off all the boxes when it comes to tariffs, right? So while everything else has been going on, the administration has been doing a lot of backdoor, backroom, whatever you want to call it, diplomacy. We have deals with Japan, EU, the UK. So there are a lot of deals on the tape. They're not great deals, but they're deals, right? And so today, I think the market, I think 7 years ago we did have actually, they always threaten the government shutdown. We usually always in the witching hour make a deal. Apparently it didn't matter that much to the administration to make a deal last night. They have an agenda here. And so I think what's interesting is that the market's not down more because of that. I mean, think about it. It does have an impact on everything going on here. Thousands of people are not going to be paid starting today as long as the government shuts down. So the fact that the market is not responding more negatively is kind of curious.
I had a trader say that it didn't really matter because those are government workers, and unless you work for the government or have somebody in your house that's the government, it's not that big of a deal.
It's not that, it's the confidence. Right? It may not have that big a deal, but the bottom line is it's perception of the government.
Perception and confidence. That makes sense. I mean, really, over the last 6 months, while people were worried about Liberation Day and it was doom and gloom, over the last 6 months, the S&P is up 20%, roughly.
Yes.
And NASDAQ's up 28%.
Correct.
Do we still have catalysts for higher highs going forward? Most of the people I speak with talk about fundamentals, that earnings have been looking pretty good.
So earnings have been more than 80% of the S&P beat earnings last quarter. What we had this past quarter that we didn't have last quarter was the ability to give guidance. If you'll remember last quarter with the tariffs, with so many unknowns around the numbers, many companies, including United Airlines, JP Morgan and others, were not able to give guidance. That's what caused that February, March, April sell-off. This quarter, we were able to give solid guidance because the numbers are a little more etched in stone. So that's a big deal. Are there catalysts for it to go forward? Think about what we've seen now. Oracle, Microsoft, Google, Meta are all putting hundreds of billion dollars into this capex expenditure around AI,
Yeah.
a commitment to be building data centers into the future. The CEO of SoftBank the other day said Nvidia is in fact net undervalued, which is amazing. That stock in February 2023 was $108. In February 24, it was $900. It got to $1,200 and split 10 for 1.
Right.
It is the best of breed in the AI space.
And had 2 upgrades yesterday.
Exactly.
Right.
So to think that somebody as big as the CEO of SoftBank were to think that it's still undervalued, forward-looking, the amount of work and that Nvidia is going to have to do to catch up with all the demand, the data center demand, the chip sales globally is going to be, it's going to catapult us into the next.
So you still sound hot on tech. I mean, I know you talk to Dan Ives a lot.
Yep.
I know you don't necessarily give recommendations, but are you in or out on this market?
I'm totally in.
Totally in.
You know,
don't leave the cash on the sidelines in.
You know what? Look, it's hard to tell somebody when the market's been trading it. We've had 29 record highs in 2025 already. Okay,
Yeah.
It's hard for people to say, why would I ever buy it up here? But at the end of the day, I think we're in this new rule mode where there's no bad time to buy the market. If you do it correctly and you just kind of inch your way into whatever you like, on an ongoing basis. Look, if today's high is tomorrow's low, then you're making a good move. The enthusiasm in the market, they're buying everything. They're buying crypto, they're buying gold. There's nothing inverse going on. There's sort of no flight to safety, right? Everybody is putting money to work. I think you have this new, there are 50 million strong retail traders out there who have matured a lot. They're putting money into the market as well. So it's a dawn of a new day here, I think.
What about names other than tech? I mean, we know people love tech, and there's always upside, can be downside, but I say always upside, meaning that there's a lot of price target hikes and things. We know that those are more frothy when you look at PE ratios, so those could come down, but not into a bear market from what some of the people tell me. Tell me about some of the other sectors that are of interest to you that seem like this could be something that works in the next 6, 12, 18 months.
Well, look, I think we should look at quantitative computing. We saw that there was, I think that's right behind, that is sort of the secondary and tertiary derivative of the AI trade, but it is not a Mag 7 group sector. But we saw that those stocks like Rigetti and Soon and a number of those names, and I'm not a financial advisor, disclaimer, I'm not recommending anything, but that sector was a dog for a while, then it became hot. Then Jensen came on and said this is not a 10-year situation, it's 30 years out, and then they pulled back on that recommendation, and we are now seeing those stocks go to levels we have not seen before.
I interviewed the CEO of D-Wave last week. I mean, that stock's up 225% in 6 months.
Absolutely.
And hit a new high. It's pulled back a little bit. So quantum computing. And what about good old like staples or industrials or things like that?
You know what? Look, for me, that's really not where my focus has been.
So you don't like those anymore?
No, it's not a matter
they must have been like the interesting to you of yesteryear.
You know what? When it comes to those names, I'm more interested in just looking at the indices themselves, right? Like the Dow, which is trading at record highs, 46,000, amazing. It got to 46,000 so quickly, I didn't even have a hat for it, right? And the S&P is just extraordinary the way it acts, right across the board.
And I have a secret. He has an S&P 7,000 hat.
I do.
I know you have a 7,000 hat, and I'm going to come to you.
You know what?
Do we hit 7,000 on the S&P? When does that happen?
I think it happens before the end of the year. We're at 6,700 right now.
All right.
There is still money on the sidelines. We're starting the fourth quarter.
Yeah.
Historically, October can be, people have bad memories of the crash of '87. I think seasonality is out the window. The sell on Rosh Hashanah, buy on Yom Kippur trade didn't work this year. The market forges higher every single day.
Yeah.
It's amazing. And I think it's a matter of the fact that there's a whole new generation of people putting money to work in the market.
Yeah, Yom Kippur now. Day of Atonement, right?
Yes, it is.
Okay, Peter Tuchman, always a pleasure to see you. My friend Peter Tuchman, okay, and 7,000, and we have video, and we're going to show that when it comes, so stay tuned for that. Thank you, Peter.